Hello, everyone. We hope you're having a great time so far. Please welcome our moderator, Jonathan Fine, from Finance Magnates Group, and his esteemed speaker, Jürgen Blumberg, Chief Operating Officer at Goldman Sachs. The stage is yours.
Thanks. So I've been asked to give a few more minutes to more people, so we'll start in a minute or two. In the meantime, you can think of questions and issues you would like to clarify within the ETF space. We call this session the next growth wave has just started, which seems to be the case if you look at any indicator. So we're fortunate enough to have here one of the builders and makers of this success. So we'll give it a few more minutes, unless Duska tell me we can begin, and then we shall begin. You know what, let us just start, because we're here, so we won't waste your time any further. Great, so thanks for coming. Thanks for being here with us. As I said, we are trying to analyze or look into the next growth wave in ETFs, and what we will do is try to assess what makes the tide move and where it may splash in the next couple of months and maybe beyond that. So Jürgen, perhaps you can begin by sharing with the audience some of your career path and what or how the ETF Accelerator by Goldman fits in the current landscape of the ETF space in Europe. Thanks.
Thank you so much. So my name is Jürgen Blumberg. I'm the COO of Goldman Sachs ETF Accelerator for EMEA. And before joining Goldman Sachs, I started my career as a proprietary trader in two organizations, one in Munich, one in Amsterdam. Then joined the ETF industry, I think now 13, 14 years ago with iShares in Munich. Moved over to London to join a company called Source ETFs to build up their capital markets capabilities on the ETF side, and then moved into Goldman Sachs Asset Management roughly 5 years ago, before I joined the ETF Accelerator at the beginning of this year. And the Goldman Sachs ETF Accelerator is a business where we help our clients to launch their own ETFs. So it's a service platform, it's a digital technology platform which aims to bring scale into ETF launches. And the main advantages are that clients can launch quicker and cheaper.
Great, that sounds exciting. And when we look at this growth of ETFs, one of the main drivers is the active ones. And in it, you have bonds and fixed income in general gaining a lot of traction. So on the other hand, it takes time to issue these funds. So what I'm trying to ask is, are these the conversations you have with clients, with prospects? Is bond trading indeed gaining that traction that we see as an outside lookers? And the second phase of the question would be, where's the opportunity? Because we've seen BlackRock issuing a fund focused in the LATAM, in Mexico, and I know Goldman has done the same for China a couple of years back. So where's the alpha?
Yes, very good question. So bond ETFs, if you look at the global ETF landscape, which hosts roughly 11 trillion US dollar assets under management, roughly 20% of that is in bond ETFs, and it's definitely gaining popularity. And we think as well as a business that there is a huge opportunity, especially in EMEA as well. In our conversations with a lot of clients these days, and that's very focused around asset managers and private banks as well, can be online banks or family offices, insurance companies. So they are at the moment still mainly focused around delivering funds in the equity space. But just yesterday had another client conversation around fixed income. This was scheduled around the global ag universe. And we are talking to many others as well who want to join the fixed income space in the ETF industry. And you mentioned another point, which is active versus passive. So I'm well aware that the ETF industry started 30 years ago as a pure passive industry. But meanwhile, we see that the industry becomes more and more active as well. And in the States, already a third of net new inflows every year is coming from active ETFs. And when you look into the numbers of ETFs being launched, the majority of ETFs since 2019 in the States are launched active. So there's a big drive into this active market. It has been very well received by investors, and 5% of the assets in America are already managed by active ETFs, and the rest by passive. And in EMEA, this market share is currently by 2%, so we are kind of behind the States, but we think that Europe will pick up. And we see a lot of very successful stories around active houses launching ETFs in Europe as well, and really gaining traction. So we think when we talk about the next growth wave, that's definitely active.
Okay, we'll get to Europe versus the US perhaps in a minute, but let's break down the machinery a bit. For you as an issuer or a technology provider or service provider, I know there's a terminology issue in what are you doing, so perhaps you can pinpoint the exact one. But the question is issuing a bond product different in terms of from regulation to any other aspect of the different structure?
So thank you for not mentioning white labeling.
Not at all. God forbid.
So we see us as a service platform, as I said, and we want to provide certain services around launching an ETF, and we think that our clients can be quicker to market and spend less money. So that's why we think that platforms like ours will enable a lot of new market entrants into the space. Historically, there were just maybe roughly 200 ETF issuers globally, and this number is expanding dramatically over the last 5 years. And through the help of platforms like ours and others, obviously as well.
Great, so that's how the growth rate looks like, the growth wave. However, if I look at ETFs in Europe versus the US, the picture is not always that bright in the sense that the FT piece at the time in May described it as elusive in the sense that retail traders or the retail investment public is not always either aware or exposed properly to this asset, and comparing to the US, the market share is smaller, somewhere between 25 and 50%. So where do you see and on the other hand, you guys have by far more optimistic vision if I see interviews by yourself and other executives. So what can bridge the gap and make your vision into a reality?
So indeed, whenever I travel to the States, it's mind-blowing that when you talk to people that they really know ETF tickers. And when you open the newspapers or if you watch finance television, they talk about ETF tickers all the time. And that's clearly not happening in Europe yet. So the retail adoption is somehow behind, but I think that the whole culture of investing and getting advice as well in the States and paying for this advice, and as a return then investing into the most efficient products is very advanced in the States. Here in Europe, it's a very fragmented picture. I think here in the UK, for example, many investors use advisors. When I look into Germany, it seems that self-directed investors are on the forefront who use online banks, for example, or starting to use robot advisors as well. When we look into other markets like Italy, it seems to be still very much concentrated around big asset managers and them providing solutions to end clients. But we definitely see in all of these different channels across Europe as well that retail adoption is growing. So in the UK, we see that, for example, there are now technology solutions as well, which make it easier to trade ETFs on your mobile phone, for example. IFAs, I would say, start to use ETFs, but not to a larger extent. If I look into Germany again, these ETF savings plans are massively successful, and the distribution of those is via fintechs to a large extent. And in Italy, as I mentioned, asset managers, they seem to be on this forefront in bringing ETFs to retail investors by, for example, offering portfolios which invest into ETFs. And then the investors get exposure to ETFs through those managed portfolios. So there's a wide range, and we think that the retail adoption, even in Europe, is happening now.
So this leads to a segue here. This conference brings together the retail and institutional spaces in the industry. So my question in this framework would be, to what extent issuers of funds or prospects, clients, look at the retail traders, think about them. Maybe you can share what roughly is the volume generated by retail traders, or do the fund managers look exclusively at alpha and profits?
So when I look into the ETF market as of today here in EMEA, it's still largely driven by institutions, and there's on the forefront are asset managers who are using ETFs. They use those in multi-asset solutions, even within their active funds, for example, as well. We see ETFs being very popular within private banking and wealth management portfolios. So everywhere where you get charged a fee, a kind of consulting fee or an advice, you get charged for the advice of somebody, then they are obviously incentivized to leverage the products which are most performance efficient or most cost efficient for your portfolio. And this seems to be the wealth management and private banking space. And then we see new use cases for ETFs almost every day. For example, how insurances are using ETFs. I think in the past they used those for example, life insurance products which need to be backed by certain assets. But now we see as well that they use those on balance sheet, and even corporate treasury departments are using ETFs on the bond side, for example. You mentioned this before, to quickly allocate money. And that's one of the many advantages of an ETF, that you can look through. So you see, you have a full look through on a daily basis of the portfolio, so you know exactly what you get. Then in regards to settlement and access as well, you can trade an ETF at any point in time during the day. As a retail investor, coming back to your question, you would do this typically on a brokerage platform, and then get exposed to an exchange or get exposed to a market maker directly on this retail platform, which is very popular as well. And the professional investors have then tools like Blumberg or TradeWeb to gain access, and most of them choose to trade during the day at a risk price, and few of those trade an ETF like a fund at net asset value. So you get immediate access, you have full transparency, you have low cost, and it seems this in combination attracts new investors every day.
So that's the source of optimism, I guess. You've mentioned distribution, which is an interesting case in point. So perhaps you can reflect both in Europe and maybe because it's still a nascent market in the US as well. What's the best way to distribute a fund? Let's say I issued one. I want retail traders to know about it, to ask their banks, brokerages, and so on to use it. Downstairs we have a lot of retail trading brokers. I'm not sure all of them are offering ETFs, or at least pushing it in the marketing materials, even though they can. So what, in your view, is the best, is the most efficient distribution channel?
I think for retail distribution, the ones who control the final mile are the ones who are in control of product selection and as well product offering, as you mentioned, right? Not every fintech is offering ETFs. However, I think even fewer fintechs are offering access to mutual funds. So it seems that if you want to get pooled vehicles, if you want fund structures, that especially technology companies seem to use ETFs more often than mutual funds or other structures. And we think as well that when you see the mutual fund as the kind of analog past, the ETF is the digital future. So I think it suits very well into a lot of exhibitioners downstairs and their value proposition. And that's why our business proposition as a service platform is very technology driven as well. We want to bring scale into the space because it's still a commingled vehicle, which means it's very highly regulated, either by the Central Bank of Ireland or other regulators, depends where you structure your vehicle. It seems that the CBI is most popular because in Europe, 2/3 of all assets are regulated by the CBI in the ETF space. But to set up an ETF requires a certain process, requires regulatory involvement, requires a lot of lawyers, requires a prospectus, a supplement, and requires a very specific ecosystem. So it's a very safe vehicle, right? Because you're shielded away from, I would say, the economic prospects of the issuer. It's a segregated structure, and it's a commingled structure with all the advantages of pooled assets. When it comes to liquidity, for example, when it comes to tradability, when it comes to cost as well. And many people say that, for example, direct indexing is the new wave of getting access to portfolios. But all of those advantages are missing. And I think if you do not require to have a very specific portfolio which is dedicated to yourself, if you can live with the fact that other investors are invested in the same vehicle which you are as well, then I think the ETF really makes sense.
Okay, I have many more questions. I'm not sure how many will fit in. So if someone at the audience have a question, that would be a good time. We still have time, but I want to make sure that you get your shot. So before I proceed, does anyone have anything to ask Jürgen about present and future of ETFs, synergies with the retail side or anything like that? Fair enough. In this case, I will ask. One of the more interesting things is the themes. Like, I mean, the ETF market is pretty much dominated by 2-3 players. And when you look at new funds, so far, most of which are targeting the same assets or the same asset classes with maybe different compositions or other aspects. So my question is, where do you see innovation in ETF going forward?
So the thematic space is a very good point, because up to 10 years there were almost no thematic funds around or thematic ETFs, and I think they really have the power to attract retail as well. You can get somebody excited by a certain theme, right? If you give access to a topic or a theme which is trending at the moment, then this really gets retail investors the feeling that they can participate in that. On the other side, we see as well, coming back to Germany in these savings plans, that people who contribute the same amount of money on a monthly basis into one vehicle, they very often choose all world funds or MSCI world funds. So where they can get a very broad distribution of their capital within one trade. And I think many retail portfolios often, if you build up a more sizable portfolio comprised of both, right? That you have these big building blocks which give you just exposure to the wider market on the equity and on the fixed income side, and then you add some themes which you really strongly believe in. But then if you believe in a theme, the next step is always, how do you choose your thematic fund? And that's another difficult element which is often overlooked. And I think on that side, there is still innovation required, because to get a purity of a theme, because very often companies innovate with something with other businesses as well. So do you want to get exposure to those? Or maybe more to startups which have a pure focus on one theme, but then the risk is larger, that the startup makes it or not. So there's a lot of considerations taking into account in regards how you construct your index, if you have an active fund, who's portfolio managing that. I think the choice for investors is huge, but not necessarily easy.
I see. So we're drawing to a close. So perhaps the last question for now would be following up on thematic. We see ESG losing traction and we see outflows. What do you foresee based on your own experience and insight from the conversations you make? What do you think will be the next thematic topic, let's say, like the innovation by Cathie Wood and semiconductors and the AI? So will we see a new theme dominating, or at least starting to gain traction in ETFs in 2024?
Yeah, starting with the question on themes, so we see very successful ETFs. They have 2, 3, 4, 5 billion assets under management, so there are already themes established which are very, very popular, and I think issuers will continue to launch new funds on that side as well. I think innovation, when you mention ESG, is a very good point, because up to maybe 5, 6, 7 years ago, ESG was a rand topic, and now it's in the center. And it's driven by regulation as well. So if you launch a fund these days, an ETF, in the supplements, you need to have a separate annex which just focuses around SFDR. So it's something which is very driven by regulation. The main consumers of ETFs in Europe, institutions, for example, they are very focused around ESG. So I think whatever you innovate in, it would be wise to include at least a thought stream around ESG as well. And if you want to make this fund SFDR 8 or SFDR 9, Article 9. And yeah, so I think ESG is definitely mainstream now on the institutional side and on the retail side as well. If you give somebody a choice between the same exposure and one is ESG, the other one is not, I think most retail investors would definitely choose the ESG one.
Great. So the rumors of the death of ESG were prematured. I think we'll wrap up with this. Unless you have new questions or anything like that, please go ahead. The mic is on its way.
Oh, no, I can. No, thank you, sir.
You can, but why should you?
Okay, now I'll speak. Oh my God. Yeah, apologies. I came in slightly late if this has already been covered, but Goldman Sachs, ETFs, are you or is it on the roadmap to jump onto the crypto bandwagon?
So at present, speaking for our Goldman Sachs ETF Accelerator platform, we are not allowed to help clients launch crypto products. This might change in the future. For the moment, we could not help.
Thank you.
And that's as much as compliance allows to say, I presume. Anything else? Okay, great. So thank you for joining. Enjoy your lunch. You definitely earned it. And we'll meet you later for the next sessions. Thank you very much.
Thank you.
Thank you, Jürgen.